Let's review the big topics from the past week in financial markets. Last week, Nvidia had the largest one-day market cap gain in the history of the stock market. So, the hype is warranted. For the most part, Nvidia's stock surge has been backed up by results. It is not just speculation. They continue to crush earnings estimates every quarter. That being said, if you needed another reminder that Wall Street is a sales business, over one-third of S&P 500 companies are mentioning the term AI on their quarterly earnings calls. From a high level, there are countless signs of euphoria piling up. The stock of Supermicro Computer has nearly quadrupled just this year. Speculation via call option buying has supercharged this move. The stock market has now become very top-heavy. The market cap concentration of the top 10% of stocks has hit its highest level since 1929, surpassing the year 2000. Meanwhile, the price-to-earnings gap for big tech is the widest since the dot-com bubble. If AI turns into anything like the dot-com bubble, this may just be the beginning. While investors are worrying about a potential recession, recent reports from South Korea, Japan, and Taiwan show a continued trend of rebounding exports. Data from these countries are typically good indications of what will happen more globally. This is suggesting we will see a pickup in global goods demand. Meanwhile, investors are still trying to predict when the Fed will cut rates. What if their next move is a hike? Something else is happening beneath the surface which nobody seems to be discussing. Prominent financial industry titans are cashing out. A week after Warren Buffett began to lighten up on his Apple position, this past week Jeff Bezos sold another $2.4 billion worth of Amazon stock, with a total of $8.4 billion of Amazon shares sold over the past 2 weeks. Next, JP Morgan's CEO, Jamie Dimon, filed for a sale of $150 million worth of JPM stock. That's his entire ownership. Mark Zuckerberg is also dumping Facebook stock at a historic rate. The question is, why are some of the world's smartest and most relevant business executives dumping equities? To wrap up the week, let's talk about structural trends. Yes, AI and ChatGPT are exciting, but a major economic impact in the near term is very unlikely. Let's not forget the big picture. We have entered a world of structurally higher inflation, a world where geopolitical tensions are likely to be higher moving forward, and one where central banks are going to need to finance large fiscal deficits. Real assets are undervalued. Financial assets remain the crowded trade. Thank you for watching.